Alright, what is up everybody? So I'm going to be breaking down UJ in the previous trades I have been taking on UJ, right? So the week did just end, so we're going to start off on the weekly time frames. I like, to do my pre-market analysis every single week, starting off on the weekly time frame, right? So looking at the weekly time frame, excuse me, we have this cross of moving averages being blue over red, and that is being maintained the entire time. It doesn't look like momentum is dying off. Yes, we are hitting this area of resistance, but it really doesn't look like momentum is dying off, right? So as you can see now, we formed a tested candle. So next, a couple of things we can expect for this coming week is a nice wick to be formed here, meaning there's going to be some pullback on the smaller time frames, and then maybe another bullish push, right? Because of this tested candle here. If this candlestick would have been bearish, right, and the market was truly going bearish, and this candlestick would have most likely formed bearish, right? So now looking at the daily time frame, my apologies, I am not feeling very good. That's kind of why I had to delay the webinar, but I am feeling a lot better. So I'm sorry if I sound a little bit sick. So now looking at the daily time frame, we're still maintaining that uptrend structure, forming highs and higher lows. So you can see here we kind of have this double bottom retest, where the market had formed a high right after that, then a higher low point, then a high, then a low, then now we're kind of at this high here. Overall, the market is consolidating, but I do believe we are going to be going bullish. Point A, point B. So you can see it came to that 61.80 and formed another double bottom here. So you can see on the daily time frame, we still have that cross of moving averages being blue over red. So overall, we do see a lot more bullish momentum long term. So now this is what we start writing down on our notepad. What is the weekly time frame looking like? Bullish. What is the daily time frame telling me? Bullish, right? Now let's go to the 4-hour time frame. A lot of you have been confused on the break of structure on the 4-hour time frame. The 4-hour time frame has not broken that uptrend structure. Yeah, sure, we do have this double top here, right? Sure, moving averages may look like they're going to cross, but you got to keep one thing in mind, right? The market has not yet formed a higher low point. As you can see, this is a 23 continuation. This is a 23 continuation, and this is a 23 continuation. So the market has not pulled back to even 38.2 to actually form a higher low point, right? So a 23.60 PRZ level, right, is an unbalanced zone. It could go in either direction, right? Other than that, if the market pulls back to 23, that pullback isn't significant enough to make it a higher low or a lower high point. So then we keep pulling our fibs upward. Okay, so this is going to be my current fibs here. Now, I do expect the market to either do one or two things. Here, as you can see, we have formed a tested candle already. Maybe consolidate a little bit, it being Sunday. But looking at the hour time frames, you can see we're kind of already starting to go bullish again. And then looking at the 15-minute time frame, here we have a minor area of support. Okay, here we have a minor area of support. We have the cross moving average. So I do see the market starting to go bullish again. Obviously, I'm not really going to trade on Sunday. I don't really like trading Sundays. I normally take more losses on Sundays because it's too early for me to actually enter. Now, some people are actually good at getting in trades on Sundays, but that's just not my skill, right? I'm not the best at it. So now, looking at the 4-hour time frame, right? The market is still maintaining that uptrend kind of structure. We did just hit resistance here, right? So we need to be very cautious for an actual trend reversal. Now, overall, I'm going to be breaking down the actual trades and how you actually could have potentially, entered here and actually benefited off some of these moves. So overall, here is a previous lower high point, right? Once the market broke this high, that was a break of structure. So immediately after it formed this higher high, that's why you didn't see me kind of catch this move here. I caught a very small portion. I think my entry was somewhere around here, and I ended up closing after this bearish engulfing. But that's why you kind of didn't see me catch this move here, because I wasn't confident enough that the market was going to completely go bullish, right? So I actually just, decided to not trade. Sometimes it's just better not to trade when you're undecisive of where the market's kind of going to go, right? So now you could have easily pulled out fibs, point A, point B, bullish wick, bullish wick. So you can see the market actually did come up to about that 23 based off the 4-hour as well. The market did come to that 23. I don't believe I'm going to consider this a 38 just because we saw more consolidation in this area, and it didn't really even come down to the 38. So I'm going to consider this a 23 continuation level. But overall, you know, we had this huge median of resistance here, right? So that's where I had to draw my random line there. And once the market actually did come down to this area, it kind of formed this double bottom here, and you could have easily entered. So now, breaking this down to the lower time frames, my entry was based off of M15. So once it did come down to this support, we started seeing more bullish momentum. As you can see, we did have that first cross of EMAs there. So pretty much my first entry here on UJ was a little bit early. I'm not gonna lie, it was a little bit early, but I did see the market start reversing. So point A, point B, and then my take profit was actually at this negative 27 extension level. As you can see, that was hit, and I recently did just close those orders. So that was the first entry there. Then my second entry was actually at this retest. It came down, kind of formed this bullish variation, right, at support. So then that's when I did enter again, right? This is considered a bullish variation. It's another form of an engulfing pattern. So then I did have another entry point here as well. The top right there, same stop loss area, same take profit area. And those trades were hit, take profit were hit after a decent amount of time. So I'm going to show you how I scaled in on this order. So you can see both my entries were there based off of M15. And that's what they look like on the hour time frame. So once the market actually did come up and form kind of this higher high here, you can only expect the market actually pull back down and form that higher low point. So, you know, you have your major areas of support and resistance, and you have your minor areas of support and resistance. So now, using my random lines, I did mark this off here, basing it off the wicks, right? As you can see later on, after this area, minor area of resistance was broken, it came back down and was retested. So once this support was formed here, I was actually looking at the 4-hour time frame for a tested candle, because when you see a tested candle on the 4-hour time frame and the market is uptrending, that means a lot has happened on the hour or 30-minute time frame. So as you can see here on the 30-minute time frame, I'm actually going to mark off this tested candle on the 4. Right? Also, you could have easily pulled out your fibs there as well. As you can see, it came back to that 23. And then that's what actually also helped my entry point. So I'm just trying to kind of go through what I was thinking there and then. So the market actually did come back down to this area of support, and it wasn't looking very clean, but all of this seller's exhaustion was kind of telling me that there wasn't enough bearish momentum for the market to keep pushing down. You know, the market is at a 23.6 CPRZ level, so, you know, knowing that it is unbalanced, I'm actually going to wait for a cross of moving averages, and then, you know, I'll decide if I want to enter there. So we kind of had a more bearish movement or bullish movement, and then another bearish engulfing, then another bearish or bullish kind of tested candle here, bearish kind of tested candle there as well with this seller's exhaustion, and then this bearish engulfing, so bullish engulfing. So once this kind of bullish engulfing happened right there, that's when I decided to enter the market yet again, still holding those other positions there. So stop loss was actually a little bit bigger, 14 pips. Then I had kind of the same take profit area, but as you can see, this is still a 1 to 2 trade. 1 to 2 risk reward, so it is kind of worth it for me to actually enter there. So you can see this order went almost in profit immediately, and then obviously I held that entire trade the entire time until it did hit the negative 27 extension level based off of that first fib I had pulled out, and that's when I closed both my orders and exited and stopped trading UJ. So hopefully this video did help you guys out a little bit. Nothing too crazy, like I said before. I do believe UJ is going to keep going bullish, so I'm going to reset my fibs based off of the daily time frame. Point A, point B, yeah, we've just reached that 23, so let's see what happens. I do believe UJ is going to continue going bullish though, so I'm going to put my 4-hour fibs, mark off some areas of support and resistance as well. So I'm actually going to hop on the line chart, as I don't have any support and resistance levels. Turn off all my indicators, go to the horizontal lines, and then pretty much look for the major areas of reversal. So immediately I see one right here, right? So this could be considered a gap. This can be considered a gap as well. And then we have kind of an indecision level all around this price here. Of course, I do believe this is another nice level right here as well. Overlap and overlap. And then I'm going to put one more. I always like to have at least 3. So probably around here as well. All right, so yeah, that I think this is fine. All right, so I'm gonna leave it like that, go on the candlestick chart, and then kind of look to see if maybe I can make any small adjustments, like right here. Maybe lower it even a little bit, like right there should be fine for that one. This one's just fine. As you can see, here we have a gap, here we have a gap, the wicks touched, as well as when the market came down, kind of formed tested on that area as well. As you can see, even the market came down, formed a big ass wick and rejected it. So I do believe the market is going to continue going bullish, right? But it would come in confluence if the market were to come down to that 38 PRZ level. So let's see what happens when the market does open. You know, I am expecting the market to continue going to at least 114. You know, possibly even 115, which is at this kind of key level over here. But that's kind of more long term. That's kind of basing it off the weekly time frame for it to actually reach 115. You know, that would be insane. But overall, the market is telling me that, you know, it's going to continue going bullish, especially looking at the weekly and the daily time frames. You know, the monthly as well. So far, we've left this huge wick here. So let's see if this monthly candle can actually close bullish within another 15 days. That would be pretty great. So you can see also, you know, we do have that cross moving averages on the monthly being blue over red. So everything's screaming bullish. And that's how I just like to build my bias. Now, of course, I'm not going to be married to that bias. If I see the market actually reversing and possibly going bearish, and I'm going to go with the bearish bias. But let's see what happens market open. So yeah, hopefully this video did benefit you guys a little bit, and I will be talking to you guys in the next video.